Hello, folks. Welcome to the Weekend Investing Daily Bite, 6th of October. A very good start to the week. In fact, entire Asia was looking very good, led by Japan. Japan is seeing a new lady PM come to the power, and she has very radical ideas, unlike the previous government. And she wants to have a very dovish, expansionary fiscal policy. So suddenly, Japanese market is rising, Japanese yen is dropping against the dollar, and I think there is a rub-off effect happening in rest of Asia also. That Japanese investments likely are going to accelerate, and India can be a very big beneficiary of that. And the yen carry trade, which was said to be dying, has a new life. So if yields are not allowed to go up in Japan, then of course yen carry trade will prosper. So that is the sort of Japanese angle to this, and Japanese equity markets and gold dollar market was shooting up like nobody's business. And there is no other, reason one can ascribe to this kind of a move, which happened starting from 6 a.m. this morning. So that's where we are in the markets. We are again above 25,000 on the Nifty, and we'll see some charts, and you'll be able to see how the Nifty actually may be breaking a base going forward. Disclaimer, as always, do understand the disclaimer, do read it fully, and only then move forward in this video. Do subscribe to the channel if you haven't, and let's look at some charts. So you can see here, third day of very nice pullback. And in fact, if you notice, there is no tariff talk for the last 3, 4, 5 days. That narrative has just gone in the background. Nobody is even talking about any talks going on between India and US. So suddenly now that focus seems to be shifting away. Of course, it can come back any moment, but right now, market is not focusing on it. 25,077 on the Nifty, 0.74% up. Very, very nice looking chart for the very short term, I would say. Nifty Junior up 0.34%, not as bullish. Mid caps up 0.7%. Very nice chart here as well. Small caps up absolutely flat, so 0.09%. So there is a deviation today that has happened where large caps and mid caps have rallied, but small caps have held back. Bank Nifty is actually breaking this pivot that we have here, the resistance, and has moved up. So that is certainly a very good sign. You can also see a inverted head and shoulders pattern that is getting made here. Um, if we stay above this, we can certainly pull up a couple of thousand points above this to perhaps 57,000 or so. So Bank Nifty also is looking quite good going forward. Gold, as I mentioned, is in completely bull grip, 11,923 per gram. We have come from 9,900 in just over 5 or 5.5 weeks. It is a relentless run. This kind of a run could come at the very end of a rally also. So there may be a intermediate top that we are about to make, perhaps $4,000 on the uh, dollar gold chart, and we may spend a few months uh, correcting or consolidation after that. Or perhaps this is just a new sort of pace at which people are accumulating gold. And I'll come to some data in the second half of the video that might startle you to some extent. Advanced decline trends virtually flat, I would say. Declines outnumbering advances, but declines reducing through the day. So that's a good sign for the bulls. You can see IT stocks coming back up very nicely. Banking and finance also coming back up very nicely. Reliance up nearly 1%. Some FMCG stocks losing ground. In the Nifty Next 50 space, you had Adani Power move up, IOC, LTIM, Naukri, Solar, TVS Motors, Chola Finance, and some give up after results of DMart, Siemens Energy, uh, Jindal Steel, PFC, etc. Chola Finance did exceptionally well at 4%. Mover of the day, Fortis Healthcare. It rose 7.5% today, and it has been just making new highs since many, many months. Today's rise can be ascribed to this new notification by the government that CGHS, the central government procedures, which all central government employees are able to go to these private hospitals and get treatment, those prices have been jacked up by a significant amount. So obviously these hospitals will be, uh, you know, the remuneration or the revenues from those CGHS patients is likely to be going up very, very massively. And those numbers are huge, in millions actually, the number of patients. Nika also jumped 6.5% to hit record high on positive Q2 update. It had been making new highs towards this last month, and today in the last two sessions you can see. So result has come today, but in the last two sessions it's already moved up significantly, up 6.48% on the Q2. Sectoral trends nearly all positive. Metals and media losing a bit at minus 0.9%. Tourism, CPSE, FMCG, PSEs, energy, these stocks did not participate at all today. Market rally led by Nifty IT, led by capital market stocks. So BSC Limited has moved up some 5-6% today. There is some rumor in the market that weekly expiries are not going away. So now it is the reverse of the previous rumor, and the stock is rising. Private banks up 1.2%, service sector up 1.15%, financial services, Nifty Bank, oil and gas, real estate, all moving up today. I think this is entirely the move is sort of whenever you have a dovish stand from interest rate perspective, it is that kind of a move that is moving up. Banks, real estate, uh, and even autos were up a bit on that front. IT stocks making a very strong comeback after having getting thrashed in the previous few weeks. Coforge, TCS, LTI, Tech Mahindra, and Persistent Systems, they were coming back. Capital market stocks, BSC 5.6%, Angel, Novama, Motilal, and CDSL. These stocks also were coming back. So very good performance from capital market stocks. US market snapshot, one day absolutely flat on S&P 500. Dow Jones was up 0.5%. Nasdaq 100 was down 0.28%. Small caps Russell 2000 0.72%. So, but when the market remains at near all-time high, in the last 12 months, S&P 500 is up 17%. Nasdaq is up 25.6%. That's amazing sort of rally that these markets have had. The stocks that are recently running up are Charter Communications, Thermo Fisher, Eli Lilly, NextEra, and Medtronics, all up 2.3 to 3.8%. These are stocks from the S&P 500 cohort. We also run a weekend investing portfolio on the US markets that runs on the Vested platform, and you could take a look at that as well. Tweet of the day. So this is very, very important. This tweet from Just Dario is showing a Lehman Brothers report on Lehman Brothers dated, I wish I could zoom here. This is June 2008. So in June 2008, Morgan Stanley came out with a report that, Lehman Brothers is bruised, but it is not broken and it is poised for profitability. We all know what happened to Lehman Brothers in September, October of 2008. So just 3 months before Lehman Brothers went belly up, there was an equity research report by Morgan Stanley saying that nothing's wrong, don't panic, we are on the path to profitability again. So that's why I have zero faith in research reports. And I would say that was probably around the time in my journey from 1995 till 2008 and probably till 2010 when I just gave up on, all these opinions, forecasting, and essentially just, throwing darts in the dark. Nobody really knows what is happening and when it will happen. So what is that whole point? I'm sure many people would have bet their life savings based on a Morgan Stanley report, right? I mean, how wrong can it go? But as they would find out that, the company went belly up. So have little faith in research reports. If you still want to have some, use a research report, but put your own research, your own analysis on top of that and see whether it is worthwhile going forward with that or not. The second tweet was from Bullion Star. Uh, this is also very, very important to understand. Now, this is describing the math of the gold market. So what it says is that above ground gold. So what is above ground gold? Above ground gold is basically all the gold that has been mined till date. There is still a lot of gold below the ground, which has not been mined. So that is not a part of this calculation. The above ground gold that has been mined and exists in the world, because gold cannot be destroyed. You can lose it at best, but most of it won't be lost. It is worth about $26 trillion. The above ground gold, whatever you may have, or I may have, or the central bank may have, or whoever has it. Private wealth assets under management, like for instance, Morgan Stanley has X amount, JP Morgan has X amount, or some other portfolio manager has X amount. That wealth is about $350 trillion in the world. The current allocation of this private wealth assets under management is about 1.2% to gold. That is an estimate. It could be 1.1, it could be 1.3, but it is not 5%, it is not 0.5%. So it's 1.2%. Now, many institutions like Morgan Stanley again are proposing we should have a 60-20-20 portfolio. What does that mean? 60% equity, 20% debt, and 20% gold. Their own clients are at 1.2%, but now they are saying it should be 20%. So even if you were to make a wild assumption, let's say this 1.2% allocation goes to 10%. I'm not even saying 20%, I'm saying it goes to 10%. And not today, in over 10 years. So the next 10 years, we basically uh, will create a demand of $30 trillion in gold just by this stat. And I'm taking very conservative numbers, 10% allocation instead of 20, and spread out over 10 years. It is equivalent of saying that today's India's stock market cap is about 5 or trillion dollars, and another 5 trillion wants to now enter the market. What happens to the market? Unimaginable, right? I mean, it will not double, it will go ballistic, it will just explode. That's what we are staring at in the gold market. That's the math that we need to understand. Whether this will happen or not, I don't know. Whether gold will go up or not, I don't know. But this is the math that is coming together. And if all of these uh, $30 trillion demand starts to come in very quickly, then gold could go two times, four times, eight times. You don't know, right? So this is something that the math needs to be understood. That one strong year in gold does not mean that it's over. Like a lot of people are talking that gold is up 40-50%, hence it is over now for the next 10 years. Don't underestimate what change that is happening.